welcome to Masters of Real Estate. Today we have a good friend of mine and fellow anarchist on the line, Marco Pfeiffer, that is a full-time real estate investor. And we met at one of our mastermind groups, Raise Masters, that we were working together and networking with each other. And he has some unique experience where he's been able to develop the lifestyle that a lot of real estate investors strive through, being free financially, as well as having the freedom to be mobile and invest in different areas and live where he wants to live and be able to stick and move if the state taxes go crazy or different governments get out of control. So I'll say it that way. But what's cool is that a lot of investors don't actually adhere to that type of strategy, right? They come in and find that they're grinding and working really hard and they're still stuck in that position and don't actually build that life of actual freedom. And so it's exciting to talk to Marco because he's been able to actually do that in his personal life. And, of course, just like everybody's been through different trials and tribulations. So thanks, Marco. Really appreciate you joining me today. Can you give a little bit of a background on yourself and what your experience and upbringing is, man?
Yeah, absolutely. Hey, great to be on it, Matt. Love talking to you. Always enjoy it. To talk to like-minded individuals. So that's great. Yeah, I had a pretty humble upbringing. Actually, was born and raised in Germany. I didn't have much real estate. I grew up in a small apartment with my brother. She had a bedroom, two bedroom apartment. So I didn't have really much connection of real estate. My parents bought their first house when I was like 17 or 18 years old. So real estate, when I came to the US, I was 26 years old. I did my undergraduate in Germany, had an accounting undergraduate, came here through a German company that transferred me here for like a financial analyst job. But I'd never been to the US. Never been to the US. I didn't know anybody in the US. I barely spoke English. I still got my accent, but I had a really heavy accent back then. Man, I had like $1,500 in my pocket and two suitcases. That's all I had.
Wow.
And kind of learned the hard way how to get an apartment, how to get a cell phone. Not having a credit history is actually worse than having a bad credit history. I learned that the hard way,
Yeah.
and it's one of the specialties in the United States. Then chose the corporate route. I worked as a financial analyst, worked my way up, became an internal auditor, became a controller, and climbed the corporate ladder pretty fast, pretty hard. Got my MBA from the University of Alabama, and within 9 years became CFO of a distribution company, and then for the last 10 years of my corporate career was a CFO. Along the way, in 2016, I became unemployed and was at the time it was in Houston, Texas. It was just not a good job market in Houston at the time for the type of accounting I did, a lot of oil and gas related. And I was faced with, hey, there's no cash coming in. And I learned the hard way the importance of cash flow. And yes, I was a CFO. Yes, I had savings. Yes, I was okay. But I realized if I don't generate cash flow, I'm at one point I'm going to deplete those savings. And it was kind of the wake up call for me. Was like, how can I generate cash flow that I don't ever feel I had this
Unstable.
helpless, yeah, stable, but also this squeezing feeling in your stomach where you're like, how do I pay the bills and whatsoever? So initially my goal was to get like $3,000-4,000 through rent income, net income, cash flow. Where I'm like, okay, if I ever get unemployed again, I don't know, $4,000, it covers my mortgage, it covers my basic bills. I'm going to be okay. I'm not going to be stressed. That
Right.
was my initial plan, and then everything you look back, it's a lot of it's a blessing in disguise. Yes, it felt horrible to be unemployed, but it gave me the time for 4 months to really go all in into real estate. Learning about multifamily, learning about single family, how to scale up, and really, yeah, have a good strategy how to go about it. And I think that's where a lot of people lack when they go into real estate. They buy a house here or they do this or that. But I think it's important to have a game plan. And I developed that game plan. And as soon as I found a job, I went back to work. From that day, the perspective changed. Prior to that, it was always climbing the ladder, working hard. I worked 60, 70 hours a week. And
Yeah,
I still worked hard,
that's what it
but
takes.
now the perspective, exactly. And now the perspective changed. And I was like, okay, I'm going to work hard, but it's not about climbing the corporate ladder. It's about generating more income, getting a bonus, getting a higher salary. And whatever I made more went to real estate, buying cash flowing assets. Okay. Cash flowing assets. That's what my whole world evolved around. How do I buy more cash flowing assets? I did a lot of the BRRRR method. So I bought distressed properties, fixed them up, increased the value, pulled out the cash, bought the next property. Any bonus I made, buy another property. Oh, I get a $40,000 bonus. Oh, that's a nice down payment for another property. And everything I did evolved around how do I generate more cash flow?
I
And
think
uh,
that's
and
really key, man. Like at the end of the day, the strategy and the a lot of people don't think about. They just think I'll get one house because a house might be a good investment, and they may not be thinking in their head cash flow. I know in the very beginning, the very first house I bought was negative cash flow $500 a month because I just was like, I need to own a house because it's going to go up in value, hopefully, and I'll just pay the
yeah,
negative. It's okay. At some point, it'll be positive, and had no idea what I was doing at all. And then you realize very quickly, hey, that's the wrong strategy to do, and you want to make sure you're positive cash flow every single month and have that mindset of, hey, I don't care if that's $200 a month in cash flow. That pays for my my cell phone for the rest of my life, you know. So, or what expense can you attribute that to have those minor wins along the way, and that plan is super key because so many people start off like haphazardly instead of saying, no, this is the idea, this is what I'm going for and my end goal in mind. You get there 10 times faster having that document and written down in that plan. And I think I would assume that your accounting skill sets massively helped with obviously real estate. I know I'm a CPA and it helped me so much, where to the point where I feel like it's an unfair advantage sometimes because you understand the math, you understand the arbitrages and the return on investment, and to another level. How do you feel like that has that helped you a lot in your cash flow journey
especially
and stuff?
yeah, especially on I think single family, you can come by if you know some basic Excel. It's a different business model, but definitely on the multifamily side. So I also started buying apartment buildings, and definitely on the multifamily side, it was a huge advantage in also assessing when you see a syndication deal. You want to assess passive investing. Okay, having that understanding and know how easy you can manipulate an IRR calculation. That helps definitely tremendously. But the one thing I would say is what also was interesting for me. A lot of it, when you invest in real estate, a lot of it is not a lot, but some is contrarian what you learn as an accountant. Because for me, it was all about paying off that mortgage as quick as possible.
Right,
Because
right.
hey, I'm not stupid. If over 30 years, I don't know what it is, you buy a $200,000 home, you pay like $400,000 in interest, something around that. And you're like, oh, I'm not stupid, I'm not paying all this in interest. But then when you learn that debt is actually a wealth creator, and
Right.
that's the other thing I did. I studied what the wealthy do. Okay, so I grew up lower middle class. I did my MBA, but I mean, none of this they teach you in an MBA class. That it's just not. It's just not. A lot of this information doesn't get volunteered to you. Okay, you have to
Hmm.
seek that information, and but then you learn that hey, debt is actually not all debt is bad. It's like
Right.
for me,
You're
middle
making
class
money
was
off
all
of that
about
money. So,
exactly, and also yeah, no, you're making money. You learn the power of scaling up. So if I use leverage, I think this is one of the key factors why I think real estate is so superior in that path to financial freedom and cash flow is the leverage part. Okay, if I want to buy a $200,000 property, I need $50,000. and I can control the $200,000 asset. You know, if you buy $200,000 worth of Bitcoin, you need $200,000 to buy $200,000 worth of Bitcoin, you know,
Right.
or any other asset. So I think one of the key features, benefits of real estate is the leverage part. And that was obviously the financial background helped me to understand it, but a lot of it switched my head like, no, I'm not going to pay off this mortgage. Actually, today, you ask me today, I say I'm going to refi until I die. You know, so it's just we'll never
If
pay off a mortgage again. You
if
know,
you look
I
at the
and I want to see it.
decimation
Yeah.
if you look at the decimation of that debt from that leverage standpoint and what happens because of inflation, it's a huge benefit because you're inflating away the true cost of that loan massively. And then on top of that, developing more cash flow long term from it as rents rise over a long period of time. They can obviously go down, but at the same
Yeah.
time, they can normally they will continuously always rise over a long period with inflation as well because wages slowly rise too. Obviously, supply and demand and economic indicators and all that stuff. Economics always play a role, but it's really interesting. And you know, I think what you're talking about here too is a lot. I think you know, in addition to the accounting aspect, you coming over here with $1,500 in your pocket is very difficult. Having to learn a new language, get set up, doing all that stuff, and that probably attributed more to your success in my eyes than all of the other crap. You know, your previous history as accounting, all that other stuff, because it teaches you grit, right? You have to grind it out and figure it out and just make mistakes and just do it or you don't survive. And so in that kind of situation, I feel like, and for the other people that are listening, that maybe they came from, you know, a situation where they grew up, you know, poor and they grew up in a hard life situation or had some major trials and tribulations and feel like they can't do it too. At the end of the day, that grit is what makes you. That's what makes you 10 times stronger than everybody else. And that is more of an advantage than any education that you're going to get necessarily from any institution, you know, and especially from institutions because institutions don't really teach you anything. You know, I think my professional writing class was good, but even my accounting classes were, you
No,
know,
no, that's what I said earlier.
memorization, you know,
Yeah,
so
what the institutions teach you at an MBA, what I learned in finance had nothing to do with how the real business will work. But you're absolutely right. You know, overcoming adversity, um, and I think this is in general. I mean, yes, in my case in particular, but in general, so if you overcome adversity, you know, if you figure it out, you know, you build that confidence. You know, you build the conviction that hey, if I can do this, there's nothing I cannot do. If I put my
right.
mind, that was kind of what I told myself, you know, I put my mind to it, I'm gonna succeed. And it was hard. The first 2 years was really hard. And honestly,
You can
there were
imagine.
times where I thought, no, I'm just gonna go back to Germany, you know, screw this. I mean, all my family, all my friends, everything is in Germany, you know, but I hashed it out and I'm glad I did. But that grew me as a person, and that also gave me the mindset that's like, if I put my mind to it, there's nothing I cannot achieve. Okay, and I think that's in real estate is a thing when I talk to people like, oh, because right now I've portfolio about 45 houses, and it sounds like wow, this is unbelievable. But or for someone who doesn't invest in real estate, somebody who doesn't invest in real estate is not. I mean, it's nice, but it's not that huge of an achievement. But somebody who doesn't do it, it sounds such a big number. But if you put your mind to it and you understand the concepts, what I'm just talking about, it's really not it's attainable, you know. So
Right.
I think
And
and a lot of it, yeah.
people realize you don't need to utilize your own money to do so as well. You can utilize resources and bank money and private investor capital to be able to build your own wealth if you have the knowledge base and the education. How did you get educated in the beginning when you were first starting out? And then how do you continue your education now to get better and better at what you're doing? Like, what are your kind of routines on that
In
side
the
for
beginning,
education?
I mean, yeah, in the beginning, I got a lot of it from podcasts and books. To be honest, I don't know about you, but I never really read a really good real estate books. I don't feel like there's that many
Yeah.
really life-changing real estate books. You know, there's nice, it's interesting, but I got most in terms of free education, probably from podcasts. I engaged some coaches. At the time, I was living in Hunt, from Houston. I moved to Huntsville, so I engaged some local coaches there. I and I reached out to like when I want to whatever I want to learn, I reach out to multifamily. So that's how I got actually in touch with Hunter. I was initially in his program. The predecessor to Race Master. I was in that, and just to learn about multifamily, how to build, how to raise money and whatsoever. So I think it's very important to find people who have done it before or understand what you want to do. So
I
and
think that's
surround
key.
yourself, yeah, and surround yourself with people who do what you want to do. Is that I think that's even the bit is even more important. I mean, if you surround yourself with people who say, "Hey, whatever, real estate is too risky," or you could lose all your money or whatsoever, that's not the people you want to be around. You want to be around the people who bought. I want to be around the people who bought 200 houses. Okay, that's where I want to be. That's the people I want to talk to. I don't want to be around naysayers, this and that. And you also want to listen to the people who have done it or do and walk in your shoes. I mean, as an
I think,
example, when yeah,
yeah,
when
go
I
ahead,
told
go
my
ahead.
mother I'm buying my fourth or fifth house, she was like, "Oh, my mom bought two houses in her whole life." Okay, so she's like, the idea of me owning five houses was just like, "Oh my God, you're way overdoing it. This is unbelievable. Oh no, 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 I'm worried about you and
Is
all these
too
things."
scared, yeah.
Yeah, I love my mother. Okay, I listen to my mother. I love my mother. When it comes to real estate, I don't listen to my mother. It's like I don't tell her anymore what I do because I know it's gonna stress her out. But now she sees what I do. She sees the life I live and whatsoever. So now everything's kind of smoothed down. But if I'd listened to my mother, I would probably still own three or four houses. So
Right.
it's important to to be selective who you listen to, who you surround yourself and who you listen to.
I think the podcast, the mentorship, the relationships, the even now YouTube videos and different people you can follow there, and mastermind groups and things like that are all the ways to be involved in real estate. And I've found through the networking in the very beginning, I was going to like five networking events, four to five networking events every single week for like 2-3 years, just meeting people, developing relationships, getting a bigger database, finding resources. And now I do the same type of stuff in masterminds and stuff like that consistently. And I find that you learn every way all the other people out there are making money and finding their different. They change your mindset because they think differently and they think with abundance instead of with scarcity like the majority of the population. And so being able to go through and think with abundance alone and having the different resources of people in the room that are all doing different activities that come with different skill sets, different knowledge bases, and different resources are huge from a wealth building standpoint. I find the more I'm around those people, the more I'm able to develop relationships and work with different people and make money in those ways, and more deal flow and more opportunity comes to me, like almost too much, where you have to learn to say no. I can't do that opportunity. I can't do that right now, even though it could be the most incredible deal. But when you're around
So,
those people, the opportunities come out of the woodworks, where all of a sudden when you thought you could never find a deal, there's deals everywhere. When you thought you couldn't bring in capital, there's capital everywhere. There's operational expertise, there's asset management, there's every resource you could possibly want in these types of masterminds and networking events that you can consistently attend and create friendships, and you never know how a friendship is going to get created. I mean, we became friends because we both hate the government, and we don't like to be extorted by taxes, right? And so, and I really, I think you're doing some business in Mexico as well, and I was interested in that aspect of things and, learning that too, which kind of leads me back to that whole discussion. Where are you investing now? What are you focused on now in your investment journey, and why do you do that? Are you diversifying into different countries on purpose, or do you like the Mexico market specifically, or what other places are you investing in?
I mean, first, yeah, I mean, just to go back to where I kind of saw. So when 2020 is when I was making more money in real estate than I was making as CFO. So that's when I basically quit the corporate life and corporate ladder, all that stuff, and focusing solely on real estate. The one thing about me is I'm more of a lifestyle investor. You know, I'm not really driven by, okay, I have to have 100 houses, I have to have $100 million assets under management.
Right.
And there's a lot of people that are wired different ways. I'm just not wired that way. Just for me, it's not a meaningful. For me,
Right.
it's all about how much cash do I generate every month, and the more cash flow I generate, the less I'm controlled by my circumstances. Okay, the more freedom I have, the more I can live the life I want to live. So
That's awesome.
I'm truly a lifestyle investor. Which, okay, I could do better. Yes, I could generate bigger deals, more deals whatsoever, but it's just not what
Yeah,
drives
you
me.
don't, if you don't need to, the whole point is to be free. So that's what's,
Yeah.
yeah.
Yeah, no, I don't want to create another job for myself. And I do well. I still do deals. I still buy houses. I flip a house here. I guess lately, the last few years, it just becomes harder to find rentals. There's still a lot out there. I personally got out of multifamily in 2022 when I felt like the whole interest rates and the impact that it have on multifamily. I'm probably the worst stock picker you will ever meet, but that one unfortunately I got right. The last asset we sold, it was like September 2020, and they were struggling to close the deal. And then after that, it's just with the way interest rate impact commercial real estate, it's just the valuation impact, and there's nothing wrong with multifamily. I just at the time I felt like it's a time to cash out on it. I decided to travel, so that's what I do. I live a lot in Airbnbs. I once in a while I live in a house I own for 6 months and then I sell it. I've done that before. And I personally I love Cabo, Mexico. So for the last 3, 4 years I've been to Cabo. I have some very good friends there, and every year I went there, I was contemplating to buy something there, like a condo or townhome or something, and uh, and never did it. And that's this typical thing. You go in the next year, and everything you wanted to buy is sold, and everything now you want to buy the same thing, and it's up 10, 20% value. And you're like, I wish I had done it last year. It's a typical real estate. Yeah, my or happening events, and so yeah, so I was looking. I'm still looking to Cabo to buy something there. The problem with Mexico is the tenant laws are very in favor of the tenant. They're very it's next to impossible. If someone lives in your house for 2, 3 years, it's next to impossible to get them out. So for the long-term rental, my bread and butter business is probably not what I would do in Mexico. It's just too many risks with it. Um,
Makes sense.
I Yeah, so I like the Airbnb to some extent. I'm not the biggest Airbnb fan because I like consistent cash flow with Airbnb. You have seasonalities and whatsoever.
Right.
Also, I think it's a saturated market in some areas. There's still
Hmm.
opportunities out there, but some areas are just saturated. So that would be something I do. The other thing I looked into is actually flipping houses in Mexico, and that's probably what I'm going to do is finding entry-level homes and then um, starting flipping them.
Okay.
The
Yeah,
other
I,
thing is
I've
what
I found
what-
I found that you have to shift in an economy like there is right now when you're dealing with rental properties being more difficult to pencil out, right? And at the end of the day, though, too, now debt does pencil out, and so I've been focusing a lot more on the debt side of things because I can make more interest on my debt payments and get consistent cash flow that way and make interest rate arbitrages and spreads and things like that on that debt. And so there's strategies like that from a cash flow standpoint, along with the equity building, the long term, the tax benefits associated with owning assets, of course, and hard assets like property, of course, too. And then I think it's important to diversify diversify into different countries as well. We see changes in trying to understand the tenant landlord laws in different countries, the legalities of ownership. It's important to continue your education there, so that way you do have an exit plan if something weird happens in, the Western world and stuff like that, right? Or we already, see the writing on the wall. And I think there's also, something to be said about having residency in different states to mitigate taxes in different ways, and, having more of a nomad lifestyle and picking the states that you want to pick as your, primary residence states, that isn't in a high income tax state like, where I live in California. I call it communism, so, but, it's what it is, right? And I think educating yourself consistently on these strategies is part of that financial freedom journey, as well. And being able to, live the lifestyle you want is key. I really love, short-term rentals. I invest in them myself. I am very strategic, though, in saying I want big houses that have lots of family members. So it's a unique niche versus in a specific target client that I'm going after that not a lot of other houses, are similar to. And so, someone doesn't want to go somewhere with 15 family members and have to get a bunch of hotel rooms and stuff like that. It just is way cost prohibitive, so versus one big house. Now if they have kids, they can eat from home, all that kind of stuff, with the right amenities. But with the right marketing, Airbnb can be really, really quality. Same thing with the rental properties as well. If you find the right ones, even if it doesn't pencil that well, being able to, the BRRRR method is still available out there. Even with higher interest rates and things like that, you can get discounted deals and renovate them and refinance them. And maybe you're in it for a little bit more money than 100% of your money back on a BRRRR method. That's buy, renovate, rent, refinance, repeat. So if people don't understand the acronym. And so being able to do these strategies and pull your capital out is a great wealth building tool. It's awesome you were able to build 45 of these properties for yourself doing this stuff and utilizing these strategies along with your consistent income as a CFO for a while to get off the ground, because I quit my CPA firm job and just jumped ship into real estate full time in 2006 and just quit. And looking back, I'm like, wow, that was really nice, stable income. Don't get me wrong. Just like you were like, should I go back to Germany? I was thinking in my head, should I go back to the CPA firm? And, it was stressful. Yeah. You go through trials and tribulations as a business owner massively all the time, where you feel one time you make a good deal and you do great and you're killing it. And then after a while, like you go down and your emotion goes like in a roller coaster. And so you really want to be able to have that confidence through education, your network and things like that, to make this work and make a plan for yourself, like you said. And I love I'll call it the nomadic lifestyle that you're talking about. I follow a guy that he's called the Nomad Capitalist on YouTube that talks about international travel and international residency and things like that is really valuable from an education standpoint, in that front. So how can people get a hold of you, Marco?
The best way to do is on LinkedIn. I'm pretty active on LinkedIn, create a little bit of following on LinkedIn. So the best way is to reach out on LinkedIn, Marco Pfeiffer. I'm sure the name is somewhere in the notes. That's probably the best way to reach me.
And how can you help investors and what are you looking for right now in your business in case people have resources?
I'm always in the market, so I might slow down a little bit, but I'm always open in the market. And just to one thing I'm going to add to what you said earlier, it's important to diversify and educate. I see a lot of real estate investors, they go all in on one asset class. They go all in on one thing, syndication. All I'm doing is on a syndication, and there's a lot of these gurus out there. They teach you got to go all in one thing, and I think that's the wrong approach. I think what you just said, you do Airbnb, you do owner finance, you do debt, you do this. I mean, you have to be able to adjust as things shift in the economy. Yes, right. Syndication, multifamily was phenomenal investment between 16 and 22. It's not today. It might be again in 2 or 3 years from now, but it's just not today. So now, if that's what's your thing, now you can shift to go to, okay, maybe issuing debt is the thing, maybe owner finance, maybe there's some Airbnb opportunities. I think it's very important what you just said, is to diversify, to educate yourself, always stay on the market, stay what's evolving. You know, Airbnb, you found that niche. Okay, the bigger homes work better. Okay, it's not something that just fell into your lap. So you talk to somebody, you saw other things, you might trial and error and whatsoever. But it's important to diversify, and that's one thing I see a lot on real estate where a lot of people fall short is to just do this one trick pony is all and a lot of gurus they teach that. Okay, yeah, go
Right.
all in, burn the ships, go all in into this one thing, and
That's
this
a
is
big, it's a
where
big mistake. It's all
yeah.
connected. That's what's funny is that, if you go do a fix and flip project and all of a sudden values drop or something happens, you're in it for too much money, there's additional exit strategies if you understand the note side of things or the Airbnb side for that particular asset. That might be a higher and better use of the asset than even selling it in the first place. If you've gone through all this trouble and then you're not going to make any profit off of it or make very little profit versus holding it or changing the use of that asset or doing seller finance strategy to create a note out of it and create some cash flow that way. There's so many ways of, I'll say, making money or adjusting, or I'll say stick and moving when something goes wrong. And if you have those different tools to the tool belt, it adds so much like risk mitigation for yourself. And if, the rentals aren't working, go to debt. If your debt's not working, go to rentals, go to multifamily, go to mobile home parks, self-storage, all of these different potential asset classes that you can learn about and get involved with. That doesn't mean you have to be the full operator, doesn't mean that you need to raise all the money or qualify for the debt. There's pieces that you can bring to the table as an operator or as someone that's developing resources for other people, where that you can bring certain skill sets to the table and make money with other people that have those things locked in. You just got to learn how to do your homework on those other people, of course, too. So, and if anybody wants, we have a 200-point due diligence checklist on our website, MathewOwens.com, with one T in Matthew. And my parents couldn't spell, so I say it's one T, but anyways. So, but yeah, MathewOwens.com, and we have a 200-point due diligence checklist you guys can just download. And we all the questions we ask operators and, the different metrics we go through on a deal are all there if you guys need that information. So, thanks so much, Marco. Really appreciate your time today. It was a great strategy. I love the way that you're able to build this for yourself and build a lifestyle that you want to live for yourself out of investing in real estate.
Great being here, Matt. Appreciate everything you do. Love seeing what you do, doing the different things you do. Awesome. Glad to be here.
Do you want to learn how to create financial freedom in your life through real estate and take your investing business to the next level? If so, you can follow us in one of the following ways. First, you can take one of our free webinars on how to analyze property, how to raise capital for real estate, and how to market and find deals. Three of the key pillars to becoming a successful real estate investor. Number two, you can join us on our mailing list where you'll get tips and tricks on real estate investing directly to your inbox. And number three, you can take our 6-month real estate course that teaches you every aspect of real estate investing you can think of, and more importantly, create financial freedom in your life through real estate investing strategies that I teach. If you want a master's in real estate in 6 months, this course is for you. We're going to go over how to raise money, promissory notes, syndications, fixing and flipping, buy and hold investing, tax and legal structures, self-directed retirement accounts, financial education, how to run a business, how to market and find your deals, and most importantly, how to create that financial freedom in your life so that you can stop trading your time for money and create passive real estate cash flow that you can live off of. If you're interested, go ahead and click on one of the links below, and I look forward to seeing you guys on the other side.